It's your boy Shaq coming to you with another video. You already know the purpose of this channel, man, is to help you break those chains, catch these pips so that you can live your life. Coming to you today with market structure. But before we talk about market structure, we've all heard the phrase communication is key, right? We've all heard the phrase communication is key. It's key essential in raising a child or having a successful marriage. It's essential in a teacher and their endeavor to educate the student, or rather a physician and patient. Communication is definitely important. And at the basis of communication is language. The basis of communication is language. And I want to talk to you guys today about the language of the market. So because communication is key, if you can't understand the language with someone, then you have a barrier in between the two of you. And so that you can't really successfully have a dialogue and come to some conclusion on how, how you guys can be beneficial to one another. Or even just have an understanding of what the other is communicating. And Forex is no different. If you don't understand the language of the market, if you can't understand the language of the market, then you have no communication with the market. And a lack of communication with the market means that you're not going to make money in the market. So what I want to talk to you here is about what the market does. So let's just start off with just some just easy things, right? Go ahead and get my tool out here. All right, so the market, as we all know, the market doesn't just keep going up, right? That's not what the market does. The market goes up and then it comes down and then it goes up and then it comes down, right? It does this here, or even in a downtrend, right? Market goes down, doesn't just keep going down, right? It comes back up, down and down, right? Or the market can do a sideways action, which we call consolidation, right? So the market's gonna do, one of these three things here. Please inform me if you know that the market can do anything else outside of going up, going down, or having sideways actions. I would love to know about it. All right, but my point is this is the language of the market, right? So we know the language of the market is not just completely going up or just completely going down. We know that the language of the market involves these pullbacks, these retracements. There's many different names for it, right? But we know that the language of the market involves these highs and lows, right? So these, let me go ahead and lock into it. We know the market language involves these highs and lows, or these floors and ceilings, right? This would be ceiling, a ceiling, would be a floor. Even here on the consolidation, right? A ceiling and a floor. All right, so when we begin to understand the language of the market, we have to understand that the market just does not continue to go up or just doesn't continue to go down, but we have these floors and ceilings that are a direct result of price action. Price action, again, is just movement on the market at any given time, whether that means it's going up or going down or going sideways. And so market structure, which is what I would like to talk to you guys about today, is the collection of price action, right? So just this move from here to here is price action, right? And here to here is price action. But the collection of all these price actions together is how we start, getting market structure. Again, those ceilings, roofs, resistance, support, and how we, begin to understand the language of the market. So I'm gonna go ahead and scroll down here. Get out of drawing mode, and let's go ahead and take some examples and look at this on a real market, right? So here I have pulled up the US dollar. All right, I have the US dollar, euro versus USD, right? And all we're gonna go in here and do and all we're going to go in here and do is kind of mark up this chart and begin to kind of see the language of the market. All right, so I'm going to get my drawing tool here. Go ahead and enter into the lock mode. All right, so boom, initial low. Then we have a higher high. And I meant to say that up above, guys, but I didn't want the video to be too long, right? In uptrends, we have higher highs. Let me go ahead and get out of here. And I'm sure a lot of you guys already know this, but for those who don't know, in an uptrend, we have higher highs, higher lows. Downtrend, lower lows, and lower highs. All right, higher highs, higher lows, in an uptrend, lower lows, lower highs, and a downtrend. And that's, again, some of those language pieces here. So when you see me talk about initial low here and a move up, higher high, we come back down that retracement or pullback, as you like to call it, we have a higher low. Why is this called a higher low? Is because this low of this move is higher than this low. All right, get that back out here. And so retracement, boom, higher low. We break out of that here, and now this is what we call a new structure high, or you can even refer to it as a higher high as well. All right, so what do we get here once we get back up to this point? Just like we talked above there, right? We get consolidation. All right, market can only do one or three things, guys. One of three things. So again, initial low point, higher high, pullback, higher low. We get a breakout, and now we're into consolidation. All right, we get we get a fake out here. We get a fake out here with this move here. Boom, fake out, and then we come right back up into the consolidation. But watch this, right? Because the market again is speaking a language. We come back up in here. And just for the sake of time or whatever, obviously we have a move here, a move back down, a move here. We'll just capture this as one move. And boom, what does the market do? What does the market do? It comes right back down into this structure level. It comes right back down into this structure level. And it's beginning to speak a language. What the market is basically saying here, and it's important to know, is that really there's a battle between bulls and bears, hawks and doves, right? So there's an actual battle going on, and if you can begin to think of that there's a battle between buyers and sellers, it'll also make a whole lot more sense. And I'll touch on that in later videos, but we'll just kind of still deal with market structure. So this low here was our most recent low. So when we push back into our consolidation zone, boom, we get right back there into the low before the market shoots off for the races, right? Market shoots off for the races. So let's go ahead and continue though. All right, the market respected that floor. Boom, we get through, capture this as one move. All right, obviously there's some little inside pullbacks, retracements in there. All right. What do we do when we get up here, right? We come right back down. We come right back down on this retracement, on this pullback. And where do we come down into, guys? Where do we come down into? We come right back down into what was previously a floor, or was previously a ceiling, and now should act as a floor to us. So again, the market is speaking a language, is speaking a language of highs and lows, floors and ceilings. And it's not something that is just so chaotic, if you understand. If you're able to speak its language, then you can kind of begin to understand what it's communicating to you. So at this point, what it's communicating to you is, at this particular point in time, it's respecting what was previously resistance support, means that there are not enough sellers to continue to drive this market down, and the overlying trend is still very bullish. All right, let's go ahead and take it here. Let's keep going. Boom. All right. we have a move up here. And what does it come right back into? Right back into this structure zone, guys. Right back into the structure zone, and we have a hard rejection, right? A hard rejection right there at the bottom of that of that zone. Market then comes down, breaks below that structure. But before the market continues to go down, right? Because the market just isn't a constant going down type of move. It doesn't constantly go up. What does it do? It retraces and pulls right back into the structure that it just broke. So we're having a lot of play right here, just because, again, and we're understanding, right, there's buys and sells in here. And the point of this is not to right now to get your mind and saying, okay, I could have bought here, I could have sold here. The point in it is getting you to understand communication, getting you to understand the language of the market. If you can begin to piece together the language of the market, then you can understand where you're able to get in and take advantage of the market, because you understand the communication, you understand the language it's speaking. So we get a retracement right back into that previous low. And if we're looking here now, we have that 3-point move, break of structure. This right here would be an initial point. And I want you guys to begin to start doing this on your charts. Initial point, right? Lower low. Lower high. And then I already have this marked up as a lower low. All right. And, you know, I'm gonna let you into a little secret here. Until we broke this here, until we broke below, right? Until this move happened here. Until that move happened here, we were very much still looking at a bullish market, right? A bullish market. And yes, the argument can still be made that we are in a bullish market, depending on the time frame that you're looking at, or the overall, if you're looking at all of this right here. But in the short term, right? In the short term of this move right here, the break of this structure indicated to us that now we are in a downtrend, because we have broken the previous structure level here, right? So at that point, we got initial point, lower low, lower high, break in structure, lower low, red light going off. Red light going off saying, hey, get ready, because there's a opportunity to sell the market here. Again, high probability setups, guys. If you watched my first video, I talked about high probability setups. There's no guarantee that the market will continue to go down, but there's a good chance that it will, because of the language of the market. If buyers were serious about continuing this uptrend, they would have not allowed this level to be broken, right? They would have not allowed this level to be broken. A battle between buyers and sellers again. So when this level here was broken, right? When we get that move there, and that level was broken, that's indicating to me now that there's enough sellers in the market, and that the market intends to go lower. Not 100% for certain, but again, a high probability setup that the market is intending to go lower. And what do we get? We get the market to go lower. And as you can see here, I have Fibonacci. I had a Fibonacci extension level here just to see when the market was likely to die off, when the market was likely to reverse. Boom, comes right down into that 1.272 level. And that'll be another video. I won't get too much into that, but you know, using Fibonacci extension levels and Fibonacci retracement levels in combined with market language, market structure can be just again, will take your trading to another level. But what do we get here though? All right, what do we get here? We get a move back down to the downside. All right, move back down to the downside. And even right now where we currently are in Euro USD, notice that the market had to acknowledge this level, right? It has broken above it, but there was some acknowledgement. I'm on a daily time frame, so there was 3 days, right? There was 3 days, and I'll go ahead and so it can be a little bit more clear here. There were 3 days of just essentially consolidation. If we were to hop down to the 4-hour chart, we would see essentially consolidation within here. The market is speaking a language. It respects the structure. More than likely, even if we get a breakout to the upside, the market is going to come back down to this level and retest it. That's what the market does, guys. It's floors, it's ceilings. And I want to go ahead and show you that also it doesn't matter what pair the market is on or what time frame. This can be seen on the 15-minute chart. It can be seen on the 5-minute chart, weekly chart, daily chart. It doesn't matter. So I'll go ahead and drop down one level, and actually we'll go to GBPCHF, and we'll go ahead and hop. No, sorry. GBP NZD. All right, hope you guys are learning something, man. If you're learning something, man, go ahead and give me a like. Go ahead and subscribe to the channel. Comment below, tell me what you like about it. But I'm telling you guys, if you learn the language of the market, this isn't a fancy video. This isn't basically telling you that, hey, you know, watch this strategy and you'll make $200, you know, with your next trade within 15 minutes. All that fluff, get it out. Get it out. What I'm trying to teach you guys is language, the language of the market. It's just like when you're speaking and communicating with your friends, your parents, your child, or whatever. Language, right? You have to have the basis of you guys understanding each other is language. And if you don't have the language, then you can't communicate. And without communication, you really truly can't be successful. And it's no different in the Forex market. All right, so let's go ahead, run that out a little bit here. Just a second. All right, boom. Okay, so we'll go ahead and start here. All right. And let's just go ahead and mark it up. Let's go ahead and mark up the ebbs and flows of the market. All right. We're going to move up, move back down, move up, move back down. We get some sideways action here. All right, we get some sideways action here. Give me a second, boom. Sideways action, boom. And we'll go back and we'll talk about all of these moves here. All right, we got a breakout. We move back down to the downside. Move back up. All right, we got a break. We're gonna move back up to the upside. All right, break. Move back up to the upside. All right, want to get all that outlined so that we won't have to do it, and now I can just kind of talk straight through to you guys about this right here. Okay, so again, we're speaking language. What is the market telling us? What is the market doing? Right, we got our initial point. We get a move up to the upside, and we get a retracement level. Look left, structure leaves clues. That's not my own saying. Jason Stapleton, again, if you watch my first video, big fan of Jason Stapleton. It's where I learned market structure. It's where I had my first big breakthrough in understanding market structure from Jason Stapleton and Akil Stokes. So look back left, structure leaves clues. We come right back down into that structure level. We move up, we get some consolidation, right? Whole time, market is just respecting this level here and respecting the top, all right? Boom, we get a breakout of that level, right? And even in consolidation, guys, I'll talk about that. Even in consolidation, there's a language being spoken, right? There's a structure level. You can truly see the floor and the ceiling, right? That this is the ceiling and this is the floor. And so for many people, not myself, I'm not really a consolidation trader. I tried it early on when I began trading and it just didn't work for me. I think my true level of understanding in the market now that I probably could devise some type of strategy for it, but again, not my cup of tea. But there are people who understand consolidation, and obviously you could sell here at the top and buy here at the bottom. All right, we get a breakout of that consolidation zone, and what do? We come top, boom, we drop back down, and as you can see, all right here is what? Language, guys, structure. We come, as soon as we get that breakout, this is where the market kind of is exhausted, right? Where it's taking a break, if you will. We come up, all right, and we come right back down, right into that exhaustion level, right? Right back down into that structure level. We come right back up, retest here, right? You can see this wick here, come back down, and then boom, we get a break. But as you can see, before the market broke, and guys, this is one of my favorite type of strategies, and I'll do a video, is the break and retest is the easiest way. Before the market is off with the races, boom, we get a retest right back into what was previously support this long time, right? Boom, breaks it, resistance, now comes a ceiling, and then we get a fall down to the downside. But wait, we get one more chance here, right? The market, again, it cannot help itself. The market cannot help itself. Again, it speaks a language. It speaks a language. If you're not a, the best way to kind of put this, right, is that if you're not a, if you don't speak more than one language, right? If you truly don't speak more than one language, you're not speaking English one day, you know, Japanese one day, Spanish another, right? You're like, you know, whatever your native tongue is, if you have not acquired another language, you're speaking English, all right? Or you're speaking German, whatever the case may be. So the market, you know, it speaks its language, you know, the language of the market. But what do we get? We get right here again, look left, structure leaves clues. All right. On this retest, on this pullback, we come right back into it, guys. We come right back into it. And I want you guys to understand this. No, does this mean that, like, literally just by you understanding that you're about to just become just overnight millionaire in the Forex market? No, but what it means is that you can understand the language and you can start having an edge over the market because you can communicate with the market, because you understand the language of the market, right? You can begin to understand those high probability setups, and so that you're not just chasing, but you're waiting for those key opportunities in the market to get involved in the market. All right, so boom, we come here, we get a low, right? We get a low, we come back, as I pointed out, another retest. We come back down, we drop back down. Where do we drop back down into? Look left, structure leaves clues, all right? We come right back down into that zone. Is it perfect? No, but we come right back down into that zone. We get a move back up, and this is where we currently are. Look left, guys. Look left. Structure leaves clues. Market came right back down into what was previous support. When it broke through, now it's acting as resistance. How many times have we seen that over and over again in the video that I'm in this short video that I'm showing you? All right, how many times? One over here. All right, if you're a consolidation trader, many times over here. All right, 3 times over here, right? That's the 3rd time. Boom, retracement, 4th time, 5th time. And we're just talking about just in this range of time, we're seeing the market repeat something and speak a language consistently. So I want to leave you guys with this, man. I want to leave you guys with this. If you continue to chase the strategy, if you continue to chase the dollars, right? And understand what I'm saying by that. No one trades Forex to not make money. But what I mean is, if you're so caught up in just making the money, you're going to be taking low probability setups. If you begin to piece together and truly desire to understand the market, right? Just like, for any parents out there, or like myself, married, right? I have to be able to communicate with my wife. Communication is key. understanding her language. You know, you can even go into like understanding someone's love language, if you will. But being able to communicate with the market, being able to understand what the market is speaking consistently can make you guys profit. So stop chasing the strategy and begin to understand the language of the market. And when you understand the language of the market, then you can develop your own strategy. Or if you see a strategy that you like out there, then you can tweak it and make it your own and probably even enhance it or even make it better because you truly understand the language of the market. I hope this video has been very insightful for you guys. Replay it if you need to, because truly understanding the language, understanding market structure is what made me have my ah moment. And I hope that after watching this video, doesn't matter how many times you guys have to watch it, doesn't matter. Doesn't matter if you don't get it on the first time. And an exercise that I want you guys to do is just begin to scroll back on a chart. You know, scroll back on a chart and begin to just start seeing and marking the ebbs and flows of a market, right? Just begin to take your cursor and do this. Just see it. Just see it, right? What do? We come right back down into the structure level here. We come right back down into it. We come right back down over and over again, over and over again. The market speaks the language, guys. I don't want to continue going on. I don't want the video to get too long, but I truly, truly hope that it's been insightful for you. Truly, truly hope it. And if it has, please like, comment, subscribe. Take care. Until next time, I'm out.